And welcome everybody. It is, gosh, it's today Wednesday. This has been this whole ever since mid-March. This whole thing it's been a strange couple of months. It's kind of like now getting into the new normal. so, um, so crazy stuff going on. And one of the things about being in lockdown is that I mean, for me personally, just having a lot more time. I'm not in the car. I'm not taking kids places. I'm not going to restaurants, and just have a lot of time to kind of, review stuff, look at things, and made some kind of cool discoveries that I just wanted to share. So, kind of dive in and take a look. So, first of all, I'm kind of curious to see how many people here think these markets are kind of crazy. Obviously, March, we saw the big puke. And then in April, we're getting tons of bad news, yet the markets are rallying. And you just get weird stuff going on. And I've noticed too, this more and more in the room, where there's a growing frustration from people that are trying to make sense of what's happening. Okay. And it's which I wish them luck. And the other thing is, I don't know about you guys, but this whole coronavirus thing is like literally anything you had planned for the rest of the year. In the room today, I was mentioning that a Galapagos island trip that my wife and I were planning on taking our kids to at the end of July, something we've planned on for years, that just got canceled. This is the first time probably in 10 years where I do not have a flight scheduled. So it's the new normal. And I think that's something I'm going to talk about in a little bit, as well as, what are the consumer habits that are going to get, reinvigorated here as things, quote unquote, reopen. So at the end of the day here, nothing really makes sense and nobody really knows what's coming down the pipeline. So, but what I want to talk about tonight is how I kind of accidentally did a little bit of research during the lockdown, and it started resulting in some pretty decent trades. This is the one I think, you may have got an email on. It was an Amazon trade where I made $611,000. And the idea on something like this is, well, what was the setup? What was the intrigue here that gave you the confidence to take the trade and hold on? And that kind of started this whole digging of stuff. And so that's what we're going to do, is just kind of, backpedal from there, piece it together and show you. And it's stuff that a lot of you guys already have. And then if you want to enhance it, there's that possibility as well. So first of all, for those of you that have just started trading, or you've been trading like the last 5 years, these are the most volatile markets, one of the top 5 most volatile markets of the last 100 years. And I've talked to people that have been trading recently, and they're like, gosh, this just seems so weird. And it's like, yeah, this is between the great crash of 1929 and Black Monday 1987. This is the third most volatile market conditions in the history of the stock market. Okay, so this is history here. You're trading history. This is not normal stuff. And it's important to recognize that, because if you're applying the same old stuff that you've always used to the third most volatile market in the history of the stock market, something we will probably never see again in our lifetimes, it's going to be very difficult. So, right, Tim's asking, well, so we don't suck as bad as we think we do. So the next step from this is really trying to understand the repercussions and trying to understand what happens now. So do we have to understand the larger forces at work? Does the Fed win? Or does a crippled economy win? And more importantly, what are the ripple effects? And we want to spend a few minutes thinking about this. And I'll show you kind of an easy way, is when we're doing setups, is how to automatically take this into account. Okay. So we've got consensus here that we're going to have a bad recovery, then we're going to have inflation, then a depression. Right now, nobody knows exactly what's going to happen. And I think that's the most important thing to understand, but there certainly are points of view. Fact: U.S. employment filings last week crossed 30 million. This is from 1980. The earlier record was in the early 80s. That didn't even get broken in 2008. As you can see here, this is absolutely shattered. Okay, there's been nothing like this in stock market history. During the Great Depression in the 30s, I think we may have reached 25% unemployment, but it happened over years. Okay, and then another thing too here is that personal consumption spending has fallen off a cliff. That's a record. People just are holding on to their wallets. And I think this is going to be huge. Commercial real estate is going to die. How many people that have been working at home have formed a new habit? Okay, so if commercial real estate essentially dies, and I think colleges in many cases are going to die as well, what are the ripple effects of this? How does this, how does this translate into stocks? So the other thing to think about in terms of recovery, and I was just talking about the Galapagos trip that got canceled, is that more than 100 countries have travel restrictions because of coronavirus. Before coronavirus, average travelers were 2.5 million a day. Right now, it's 100,000 a day. Okay, it's fallen by 95%. Oil prices, 21-year low. The amount of large firms that are involved in oil, what's the ripple effect as they start to close shop? The other thing here we want to keep in mind is simply confusion. Bad news does not equal straight down. I think this is probably the biggest thing I see people wrestle with, is they just don't understand it at all. Keep in mind that if we count the rallies during the 2008-2009 recession, this is what we got. There was a 9% rally, an 11% rally, a nearly 15% rally, another 9% rally, a 27% rally, a 22% rally, and a 28% rally. And while these rallies were happening, overall, we had a 58% decline. Okay. It's important to realize that within the context of a bear market, you're going to have the best and strongest rallies you've ever seen. Bear market rallies are way stronger and more ferocious and faster than bull market rallies. Bull market rallies are nice and slow and steady. Okay. So it's something to realize that too. So that's normal. Now, but don't worry, the economists are here to help. I love this because the economist, people that are supposed to understand the free markets, their headline on February 20th was Big Tech's $2 trillion bull run. And then their headline at the dead lows was that the economy is closed. Okay, so they're trying to time the stock market is almost something you can always do the opposite of. So again, you're not going to get any help there, and you're not going to get any help from the news. And then the uncertainty here. Everybody's like, oh my God, we got unemployment. And I love this. It says too many people claimed unemployment, so we told them that it was safe to go back to work. Ah, ha, ha, ha. Like, so nobody knows what's going to happen, right? So that's kind of the environment that we're in. So what's the reality check? So do you think things are going to get better or worse? If you're looking at the stock market and to an extent watching the news, a lot of people think this is going to get better. We're going to be back to normal. They're protesting, let's get out there and reopen the economy. These are call notes from BlackRock's founder, Larry Fink, from today. Obviously a very smart guy. Here's what he's expecting over the next couple of years, and here's what he's getting this firm prepared for. Expect mass bankruptcies, empty planes, and cautious consumers. Expect an increase in the corporate tax rate to 30%. The financing fears in corporate America currently far exceed that of 2008, and look for 52% of small businesses expected to be out of business in 6 months. This guy is really, really good at predicting what I would call reality versus, say, the cover of The Economist. So it's the idea here that this is something where like, oh, okay, this is going to be normal once the economy opens back up is absolutely something that I don't agree with. In addition, yes, we've got 30 million unemployed, but we've also got 20 million jobs cut, meaning these are jobs that no longer exist. This is according to ADP data. So this is not a buy, hold, and pray market. It is a market for traders who understand timing. And I think being able to generate an income from the markets is going to be especially important because other reliable sources of income, including rent, including salary, including all these different things, is going to be suspect at best. So how do we trade this? How do we take advantage of this once in a lifetime event? And for those of you that are newer, this is one of my students. He's 10 years old. And the hint of this is that this doesn't have to be hard. This will be hard to the extent that you make it hard, to the extent that you make it complicated, to the extent that you try to make sense and rationalize what's happening in the market with what's happening in the news. All right. What's funny with this is that this is my 10-year-old Dylan. He trades, and what's interesting is when he looks at the market, he looks at the markets with, because he doesn't read the news, he doesn't understand the economy, he doesn't know what's going on, he just looks at price. He does really well because he doesn't bring that baggage with him. He's got a setup that I've showed him, and he just looks for that. And when he's taken the setup, he's not like, well, you know, ADP this and blah, 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 blah. And it's hilarious and fascinating and at times disconcerting to watch. There was one day where I was sitting there and I was kind of struggling on that day, and he walked in and was like, Dad, I need $400. I want to buy an Xbox. And I was like, son, it's not that easy, you know, yada, yada, yada. And he's like, well, I see this here and I'd like to. I'm like, okay. He made his $400 in like 15 minutes and then he left. Meanwhile, I was sitting there trying to make sense of the markets. So it actually is helpful for me to watch him looking at the markets as well. Now, I've said this before, that basically trading in my life are very intertwined. A lot of the travel and things that I like to do are as a result of trading, and that's been great, but things are different now, right? So this is a trip we do, and this got canceled as well, an annual trip we do. It's with Richard Branson and Virgin Unite, which is fun. This is, of course, my trading setup when I'm not at the office anymore. But the thing about trading and life are together. But what I've been learning is that now you got to adapt. So on March 7th, my oldest son and I, we went to the Lakers-Clippers game, had great seats. And then I think it was almost 3 or 4 days later, the NBA shut down. On April 1st, I'm wearing a mask to go shopping. And then by May 3rd, I'm taping my kids down so I can trade. Okay, just kidding. That's not my kids. But the point is that things are changing and you have to adapt to that. And that means adapting to the markets as well. Okay, so to trade this successfully, we got to adapt. Now, if you have a tightly held opinion about these markets, you are setting up for financial destruction. I've seen this movie many, many times in terms of what the markets can do. And when people attach a lot of emotions to the outcome of a trade in a slow moving bull market, a lot of times that can be forgiven and the mistakes will be covered up. In a market like this, you'll just get destroyed. So you got to understand, first, this kind of a market is faster. Second, the news is the most disconnected from price that I've ever seen. The news and politicians have never seen this before, and they have absolutely no clue end game is going to go. Okay, they absolutely have no idea. Third, if you aren't trading multiple time frames, you're trading blind because it's the bigger time frames that are influencing everything. Fourth, if you're trading without patience and with conviction, you will get run over. And again, in a slow moving bull market, you don't need to really have patience or conviction, or because the bull market essentially takes care of everybody. Everybody's a genius in a bull market. In a market like this, though, you get killed. So the idea with this is we want to be able to look at the markets in such a way is that we save ourselves from ourselves. The markets are designed specifically to manipulate our minds and get us to chase moves when they're about to end, okay? Chase moves when they're about to end. I get a lot of questions when stocks are breaking out. Today, when Beyond Meat was up $22, I got a lot of questions of, is this a good time to buy it? No, it's a good time to get out of it, okay? In this type of environment, this will be multiplied by a factor of 10, okay? We got to identify FOMO versus JOMO. FOMO is the fear of missing out versus JOMO, which is the joy of missing out. Now, here's the other key point with this. Robinhood just raised another $300 million at an increased valuation of $8 billion. Why? They've opened up 3 million new trading accounts in 2020. This is money that will flow to more experienced traders, period, end. Okay? Think of it. That's 3 million accounts there with money that is yours for the taking simply by having better skills than the new people opening up accounts at Robinhood. That's how you make money in the markets. You take it from less skilled players. And I know that kind of sucks if you think of it that way, but that's the way it works. Skilled traders take money from less skilled traders. It's a lot of money coming into the markets. So keys to mastering the situation: learn how to use leverage in a way that grows an account safely and quickly. There is no reason to put yourself in an inordinate amount of danger in this market, okay? Especially if you understand options. There's a lot of safe things that you can do, and if you understand them, you should never be too stressed out, okay? You don't have to take big trades to make big dollars in this market. And then you want to develop or utilize proven trading setups and systems as part of your daily money-making routine. Not, wow, look at Beyond Meat's up $22. Should I buy it? But, wow, I've got a plan, and this is going to be JOMO for me, joy of missing out, because I have a plan and I'm waiting to execute my plan. That's it. Knowing when to trade normally and conservatively, and knowing when exactly to hang on for the big trade, that's critical. And then knowing when the markets are setting up to implode or explode, regardless of the news being good or bad. Okay, note here the disconnect between the news and things being good or bad. And then taking advantage of the one thing that the little guys and gals, that's us, that's me, that's you, have that big funds don't, and it's liquidity. They would get on their hands and knees and pray to have the same liquidity options that we do. We can get in and out of a trade with the click of a button. They cannot. That gives us a huge, huge, huge edge, as long as we know how to exploit it. So words of wisdom for one of my mentors. If you guys have heard the story, one of my mentors, her name was Mary Ann. She was a futures broker with Merrill Lynch for 12 years. And she noticed that all of her clients that lost money all did the exact same thing. One, they overtraded. Okay. Two, they used too tight of stops. And three, they always use market orders. And so she decided to retire from being a broker and become a trader. And she did exactly the opposite. One, she under traded. She used too wide of stops. And three, she only used limit orders. Now, when I went to go visit her, at first I was like, okay, yeah, what's going on here? Yeah, I mean, because she looks like a kindergarten teacher, so I didn't think she was a real trader. And then she asked me to be quiet, and she picked up the phone and she placed 100 lot order on the S&Ps. And at that point, she had my undivided attention. She's a super successful trader. And one of the number one things that she stood out, the two things she told me, but the one that stood out the most was, John, traders just aren't born with the patience gene. And until this is the kindergarten teacher part, and until they develop that, they are fresh meat for more experienced and more patient traders. And that was a thing. And because there was one day when we were trading together, and I kind of chastised her because there was all these big moves in the markets. Her orders didn't get filled and she didn't have any trades. And I said something like, well, don't you feel like an idiot for missing out on this big move? And she just looked at me and shook her head and laughed. She's like, that's when she kind of hit me with the patience gene. And also that when you have a defined setup, the only job you have is to wait for that setup and take it. And she's like, John, until you learn those two things, you will never make it in this business. And she was right. Anytime I got into a drawdown or anything like that is because I forgot those two principles. So the markets like now are nothing like we've ever seen. And so the question is, does that mean they are hard? So first, of course, many of you know I'm a fan of the Squeeze, and of course, more recently, the Squeeze Pro. And this signal has set up a lot of nice trades this year. We'll do a quick review. This is the Squeeze Pro. I think most of you guys have this already. So this is what it looks like if you don't. What the Squeeze is simply a compression. The dots represent a compression of volatility. When there's a compression of volatility, then when you get the green bar here, that indicates a release of volatility. And then typically you're going to get a greater than expected move. Okay. So this was a 5-minute squeeze. We bought ETFs here, and it was good for $13,000. That was a 5-minute chart. Here's another 5-minute chart of the NASDAQ futures. This trade was insanity, and a compression of volatility. It released it, and this was good. The NASDAQ futures here moved up like 300 points in 30 minutes. A nice 6-figure trade. And that was the only trade I did that day because I was waiting for the right setup. This was a trade on Shopify way back when it was $500. But again, this is a 30-minute squeeze, right? And you got the compression, we got the entry, and then the volatility was released, and boom, it was good for $50,000. So that's the squeeze. So I'm a huge fan of the squeeze. Nothing's changing with the squeeze, but I wanted to find better ways to utilize this. Was there anything here that was missing in terms of opportunity? So, and this is an example of Google. So let's make sure we're on the same page real quick for those of you that don't know. So the Squeeze Pro is simply a combination of the old squeeze. So this is the old squeeze right here. And this is a weekly chart of the spiders. And this came about because I was like, wow, that's a big move right there. Why didn't the squeeze catch it? And this turned into finding updated settings that would catch that. Okay, so that's what the Squeeze Pro is. And the Squeeze Pro, essentially these black dots here, not only do they show up sometimes when the old squeeze doesn't, okay, and generates huge number of signals, but they also can give you a heads up. So if the black dot squeezes appear and then the red ones appear, that's great. And so they're oftentimes a heads up. So, and then from there was another one, and it's the orange squeeze, and this one's really rare. And so the Squeeze Pro, essentially what that does is that it takes all three of these and just combines them so that you can see all three signals at once, okay? So that's all the Squeeze Pro is, just so you guys, just a quick recap. So when you see the Squeeze Pro, you're going to see black dots and red dots and sometimes some orange dots, but it's just taking the three best settings of the squeeze, put them on one time frame so you can see them, right? So that's what that is. So that's the way to look at it. So the Squeeze Pro, it's super powerful, and it's even better when you can line up multiple time frames. So if I'm doing short-term trades, this is the setup that I use, just like this. So like on Tesla, which obviously is one of my favorite stocks to trade, I can sit there and I can look at a daily chart. I can look at the 30-minute chart, and I can look at the 5-minute chart. And what I'm looking for are squeezes that's set up. So like right here on the 30-minute chart, it's like, oh, nice. I got the black dots, I got the red dots, and I got the orange dots setting up. And wow, on the 5-minute chart, it's setting up too. And so what I know when those kind of come together, it kind of creates some opportunities. And so that's always been my thing, is just like, all right, I like the squeeze, but I want to see what it's doing on other time frames, right? Okay, so here was what I dug into. And as I started doing research on this, what I found is that the most powerful trades happen when there are squeezes on multiple time frames. Okay, so the really big trades, they kind of seem to happen out of the blue, right? Hardly anyone sees it coming until after the fact. And of course, as per usual, in hindsight, it's obvious. But in the moment, when everything else is going on, it's just noise. So, which begs the question, what do the best trades look like before they actually happen? So that's what I got really curious about. And since I'm in lockdown, I had a lot of time to look at this. So this is the thought was, okay, so what are the time frames? How many squeezes are ideal? Is 2 time frames better, or is 7 time frames better, and all that kind of stuff? And as usual, I got overwhelmed very quickly. And it really just kind of came down to, how many time frames can I watch? Can I reasonably be expected to watch? Because it's you only got so much brain power that you can use every day. So here's what I maxed out at. And so I'd have 18 time frames, and I'm looking at Tesla, monthly chart, you got the weekly chart, you got the 4-day chart, the 3-day chart, 2-day, daily, 4-hour, 2-hour, 1-hour, 30-minute, 20-minute, 15-minute, 10, 5, 4, 3, 2, 1. So as I was watching these, I could literally go like, oh my God, there's a 1-minute squeeze setting up, and a 2-minute squeeze, and a 3, and a 4, and a 5, and wow, there's a 10 and a 15 and a 20 and a 30. So these are all setting up. So this is going to be a great kind of a day trade. And then I could do a process check. Is there anything on the larger time frames? Oh, on the 4-hour chart, there's a squeeze. And of course, this monthly squeeze here fired long. So that's what I kind of started playing around with. And what I found was, of course, was exactly LMAFO is that this is a lot to look at, right? So it's just like, oh my, I had a headache after like 30 minutes. So I was excited about this, but obviously I was dismayed and I said, Eric, my brain is exploding. This is not worth it. Help me. Help a brother out. So I called him up. I think he gets a nervous tick anytime I call. But he said, give me a week. And here's what he did. So now, instead of having to look at all 18 of those charts, he just did it where I could just look at all the time frames right here. So on the 1 minute chart, I can see that there is a red squeeze. On the 2 minute chart, I can see there's a red squeeze. On the 3 minute chart, a black squeeze, a black squeeze, a red squeeze, a red squeeze. Now, if it's green, that means there's no squeezes. But on the 2-day chart, there's a black squeeze, okay? Green, no squeezes, and a monthly. And I was like, oh my goodness gracious, that was way better. So that was amazing. So then when I got this tool, I started playing around with it, and it was just like, it was really, really powerful just in terms of being able to, at a glance, see what's happening on 18 different time frames. And you'll notice this is a 1 minute chart. So I'm not necessarily too excited about the 1 minute squeeze, but on a 1 minute chart, I can look at all of the time frames above it. All right. So I was just like, okay, so that was amazing. So excellent. So I didn't know if that was something like, okay, we could do that with the Squeeze Pro, and we did, and great. So as we did that, I started setting up trades. So this is a NASDAQ trade using that, and that was good for $18,000. And it was, I think, it was like a day trade, 20, 30-minute trade. Netflix, this is an amazing one. And if you see this on Netflix, of course, when I did this, there was a 1 minute squeeze at the time, and I took the screenshot too late. There was also 10, 15, and 30-minute squeeze. But notice here, I didn't even know that there were squeezes on the 2-day, the 3-day, the 4-day, the weekly, and the monthly chart. Like sometimes I forget to look at those, and it's like, oh my God, Netflix is going to explode here because those larger time frames are there, right? So Netflix, this was a trade on Netflix. It's $200,000 trade, just being able to time all that together. So again, so Amazon, going back to Amazon, and I talked about, hey, it was a $600,000 trade. When I did it, I was looking at this going like, all right, we got, obviously there's a monthly squeeze setting up. And then as we go along, at the time that I was looking at this, which was right here, there was a daily squeeze. There was a 4-hour squeeze. There was a 2 hours, all that kind of stuff. And it was an eyesore. But this is the trade that turned into, the $611,000 trade. Now, going back to this eyesore, like, oh my God, I mean, I have a headache looking at it right now, to this, right? Now, again, the screenshot was taken a little later, but again, at a glance, you could see all 18 time frames and if something is setting up, okay? So that was really cool. And so the thing about this is that, so the 18 time frames is super awesome. So this is a screenshot of the S&Ps. Okay, so how does this work? So if there's an orange dot, all right, if there's an orange, or not I guess it's not a dot, right? So if you see orange, so that's orange right there, okay? Orange means you have all 3 squeezes on that time frame, okay? So so if there's orange, that means there's also red, there's also black, okay? If you see a red square, so red square on 2 minute means that there's a red squeeze and a black squeeze. And then of course, if you see black here, that means that there's a black squeeze, okay? So on this chart, you've got the monthly squeeze, which is red here. That means there's a red and black squeeze. The 4-hour at this time was black. That means there's a black squeeze. So at a glance, you've got all this information in terms of what time frames is there volatility compression happening, and then the color of the squeeze, because the orange is the tightest, potentially the most explosive, red second, and black's third. So that's the part that's really cool. So Pete, you've got a good question. So does it tell you if the longer term squeezes have bullish or bearish momentum? So that's a great question, because that's what I exactly started thinking about as well. So what was missing with this? So first of all, we got all 18 time frames, 3 different squeezes all at once, nothing short of a miracle. But what's missing? How do I know if the squeeze is setting up to fire long or short based on what? The momentum. Okay. So if you look here at IWM, so IWM, you can look at this and get a sense of what's happening with this stock. It's like, okay, on the monthly chart, there's a squeeze, and you can see the histogram here. I know this is an eyesore, but the histogram is red and it's below 0. Okay, that's negative, meaning that the odds are it's going to go lower. Okay, so as you go along here on each histogram is going to be different. But again, if you're looking at the histogram on each time frame, and if there's a squeeze, I'm getting a headache just thinking about it. Like, okay, here's a squeeze, but what? So from here then, so the first thing is we want to understand, so what does the histogram do? Okay, so just so you guys are all, so we're all on the same page and we understand the histogram. If it's light blue, okay, if it's light blue, that means that the momentum is above 0 and rising. Okay, that's bullish. If it's dark blue, that means it's above 0 and falling. So oftentimes that can be bearish, or it means that the move is at least petered out. If it's yellow, and a lot of people don't realize this, it's below 0 and rising. Oftentimes this can be one of the most bullish trades. It's a slingshot, okay, as you go from yellow to blue. So you get the slingshot effect. And then if it's red, then basically you have momentum below 0 and falling. So just to recap, light blue is bullish, dark blue is bearish, yellow is bullish, red is bearish. Okay, so it's like, all right, that's awesome. So Eric, what if we could see all the histogram colors at a glance? It would make this the ultimate trading tool if we could do that. He's like, oh God almighty, seriously? Can't you be happy with what you have? I mean, that's not what he said, but I think that's what he was thinking. So we talked. He got to work on it. He said he was like, I think that's impossible. And I gave him a little pep talk. You know, you can take the IM out of impossible and make it possible. So he grumbled at that. And so here's what he did. So take a look at this. Here's IWM. If you guys know Eric, that's, you know, he's not a grumbler, but it's kind of funny to picture it. So here's IWM. So I just took this screenshot 5 minutes before we started, so it would be accurate. So if we look at this, we can see at a glance that we've got the black dot squeeze on the monthly chart. There's no squeezes on the weekly, the 4-day, or the 3-day charts. There's the black dot squeeze on the 2-day and the daily chart. There's no squeezes on the 4, 2-hour, and 60-minute charts. There's a black squeeze on the 30-minute, red squeezes on the 20 and 15. No squeezes here, and a red squeeze. Now, the only histogram I can see is the 1-minute chart because of why? Because I'm on the 1-minute chart. So I can see that the 1-minute chart is above 0. But my question is, what about the histograms for all these? Because if I knew that information, that would help a lot. So voila. Here's the same chart, and you're going to see another line of code below it. So what is that? As my 10-year-old would say, Dad, what is that? So here on the top, on the very top, we've got the squeeze. On the bottom, we have the histogram color. Okay, so here on the monthly chart, we have a black squeeze and we've got red momentum. Okay, on the 2-day chart, we've got a black squeeze, but we've got light blue momentum. Of course, it's had a bounce, right? So now, all of a sudden, at a glance, I can get a snapshot of a chart that's better than any research, that's better than any news, because it's telling me the supply and demand on each time frame, and on each time frame whether or not there's a volatility compression happening in the form of a squeeze. Does that make sense? I was super excited by this. It was just like, oh my God. And I was telling my wife about this, and she's not excited. I don't get excited when she talks to me about her decorating stories. So in exchange, she doesn't get excited when I tell her about discoveries like this. But what I found is that this is something, yeah, all of a sudden you just need one chart, right? You don't need 18 different charts and 18 different monitors and anything like that. So I found this to be really cool. So if we go back to the Amazon trade, what it looked like at the time, of course, is, I know that there's the red squeeze here on the monthly chart, right? But also look at this. The histogram on the monthly chart is light blue, weekly chart is light blue, 4-day chart is light blue, 3-day chart is light blue, 2-day chart is light blue. Guess what light blue is? That's above zero and rising, right? So yeah, so the daily and the 4-hour were dark blue, but guess what? If these are dark blue and the larger time frames are light blue, what you're looking for is that the dark blue rolls in the direction of the higher time frames, okay? So does that make sense? So a soft momentum here backed by this means that you want to buy. Okay, so just things like that. That gives you just a much bigger relief on that versus this. Okay, so I can look, again, looking at this at a glance gives me a lot more information at a glance than, wow, let's see, then if I can find it again, there we go, than this. So what's happening here is that all of the information that is on this is summarized right there. So that part was just really cool. So prior to this, we could only see, maybe the old squeeze, or we had to go look at the time frame to see the histogram. So with this combination, for the first time, we can see multiple squeeze pros. We can see the histogram momentum and the momentum on the larger time frames behind the signals. So when I talk about waiting for the right setup, all of a sudden it just got a lot easier, because you'll be able to look at stuff and say, oh, why would I want to take this if the larger time frames aren't even backing it up? Why even mess with it? So for Netflix, look at this on Netflix. I mean, this stock is a boss. We got a monthly squeeze setting up, but more importantly, the histogram on the monthly, weekly, 4-day, 3-day, and 2-day is light blue, indicating that it's above zero and rising. We don't need to go back and look at all those charts. That's telling us at a glance, okay? So now we're able to say, okay, great, I'm gonna drill down. There's a 4-hour red squeeze here, and there's yellow momentum. Remember what I said about yellow momentum? Yellow momentum is special. Why? If it's yellow momentum, that means we're looking for it to hook higher in the direction of the larger time frames. It's like my favorite setup right there. So that kind of stuff can be super powerful and suddenly is easy to find. So question, yeah, is it, yeah, so whatever you trade. So you can use, I use this with futures as well, S&Ps, different things like that. Here's IWM. So same thing there. So what I'm looking for here, and I've been talking about wanting to get puts here, here's what I've been watching. Now we know that the momentum on the monthly chart is red, okay? Yeah, now the weekly, the 4-day, and the 3-day are yellow, but remember, the big daddy here is red. So what I'm looking for are some lower time frames to start turning red. Look at this. The 2-hour chart is dipped to red. So it's telling me that it's starting to roll. And what I would look for is that then all these to also start rolling to red. But that's what that is a signal that I could take, the next 2 or 4-hour squeeze that sets up there. All right. Again, it gives me a snapshot of what's happening on those larger time frames. Now, here's a Tesla trade that I did. I don't know if this was Monday or yesterday, but I was testing it out. So check this out. So here we are. I'm sitting there. So think of it this way. This is chart number 1, chart number 2, chart number 3. So chart number 1, I'm sitting there and I'm looking at Tesla. I'm like, okay, it's up $16 and, we got this pattern. There's a 1-minute squeeze. Now, I don't care if there's a 1-minute squeeze by itself. I'm not going to trade a 1-minute squeeze by itself. But as I'm looking at this, I notice there's a 1-minute squeeze, there's a 2-minute squeeze, there's a 3-minute squeeze, and there's a 10-minute squeeze and a 15-minute squeeze. The 10 and the 15-minute squeeze are green, light blue. Obviously, there's a lot of light blue here. So even though we're below zero here, what I'm looking for is for things to kick back up here. Okay, so I take a position, I buy some calls. Now, flash forward to here. This is about, I don't know, 10 minutes later. You can see that the 1 minute histogram has gone above zero. So instead of yellow, now it's light blue, right? The 2 minute chart, instead of being red, is now yellow. Okay, we've got a new squeeze. We've got a 4 minute squeeze here, and we've got a 20-minute squeeze. Woo! I think this thing's gonna pop. And indeed, it does. So we pop from about 778 up to 786. And you can see here now the 1 minute squeeze is fired. That's why it's green. You can see all this, and you sell into this. It's a beautiful 1, 2, 3 quick hit setup. This trade lasted about 30 minutes. And this was good. I got in at like 30, and I buy deeper in the money options. You don't have to. You could buy out of the money options because it's a quick hit. You're not going to get a lot of theta decay, but it was good for a quick trade there. Okay, so that's the kind of stuff I was excited about, because the uncertainty of this market means I don't want to have a lot of exposure overnight. If I can make a lot of money in 30 minutes versus having to hold on to something for 3 weeks, I'm totally okay with that. Like I will not feel bad about that in any way, shape, or form. So first of all, the Squeeze Pro by itself is awesome. So if you got the Squeeze Pro, you can look at 3 different time frames. You're good to go. Think of it as a 9/11. If you want something that's kind of fully decked out like a dashboard, just think of this as like the 9/11 Turbo. It's just like, it's really, really like awesome. And especially in this kind of environment. And in this kind of environment, you really need to be picky. And there's this uncontrollable urge to be part of the action. But at the end of the day, we just want to make money. And the way we're going to make money is if we're patient and we know to wait for setups. And we have the confidence that when we do wait for a setup and we take it, that it's got a higher probability of working out than it doesn't. Obviously, nothing's 100%, but when you can see all the time frames lined up and the power behind it, it suddenly makes chasing inferior trades appear as ridiculous as it should be. Like, why would I risk my hard-earned capital on that? Like, you can be a snob about the setups that you're taking. The other thing about this is really digging in to scans. Like, what are ways we can scan, and at least, I mean, we can't scan all 18 time frames, but narrowing down, like, okay, what about show me all the 2-hour squeeze pros with short interest above 7%? That can give us a hit list to then put through our 18 time frames, right? And really dial down on that, which makes it pretty awesome. Okay, so the idea with this, and you guys know, if you guys have been with me for any length of time, you know the drill here with this. If you don't have patience and you don't have a specific setup like we talked about, what's going to happen is you fall into this trap. This is the trap that the market takes you in. This is the trap that the 3 million traders that opened up accounts at Robinhood are going to be in and are already in. And frankly, because the market's been rallying, I can't tell you how many people are convinced that the bottom is in. Now, I'm the first one to say they may be right, okay? I'm looking at a lot of stuff that says they're probably not, but regardless, I'm still taking setups. If the market's going up, I'm going to take bullish setups. And if the market is going down, I'm going to take bearish setups. But there's that lot of, oh my gosh, I'm getting excited, euphoria, essentially buying the top. And then there's the anxiety, denial, fear, depression, panic, capitulation, despondence, and depression. Notice here is the highest earning potential. Squeezes are designed to pick off people that bought the highs. We come down to the mean, we consolidate, we build up a squeeze. That's where we want to get in. And it's the opposite, of course, on the downside. People that short the lows and then they get stopped out. But that cycle, if you're not aware of it, you're going to unwittingly get sucked into that unless you have kind of a system like this. With Robinhood. And also be aware too, and traders, this is super hard to forget, but you automatically approach the market based on the experience with your last 2 trades. Human beings have short-term memory, and what happens is literally your experience with the last 2 trades actually gets hardwired into your nervous system. So the analogy here is this is from Mark Douglas, the 5-year-old, if the first experience with the dog is Lucy, which is a dog that Henry and Mandy have, which is super sweet, then every time they see a dog for the rest of their life, they're going to first experience joy. But if the first dog that they encounter is this dog and they get bit, for the rest of their life, the instant they see a dog, even before what they realize is going to happen, they're going to experience fear, because that experience just got hardwired into their nervous system. As traders, it's the same. If your last two trades were great, you're going to go into the third one with joy, i.e. euphoria, which is a disaster in trading because it gives you a sense of false confidence. Even if you're feeling euphoric, you've got to have a specific setup that you're looking for, or you're going to get killed. Euphoria is the most dangerous one because you don't take into account the risk. Generally, people have their worst losses after their best trades. And then fear is equally bad because it's that hesitation to get in or waiting until it's safe. So the nice thing is when you have a setup like this that you have confidence in, that can go away. So I love the squeeze, obviously. I'm really excited about this because you can look at the squeeze and the histogram on 18 time frames if you want. You don't have to look at all 18, but it really just gives you a good tool. And I'm just finding this to be a game changer, especially in this market. This is a once in a lifetime opportunity. We're probably never going to see markets this volatile again in our lifetimes. If you think about it, this is the third most volatile market after 1987 and after 1929. All right, this doesn't happen very much, and it ain't over yet. So when you get the timing right, the biggest barrier to enjoying solid gains with options is timing. So when you do get the time right, you do get the direction right, and you learn patience because you have the confidence to first identify and wait for the right setup, you can do beautiful things with leverage. All right. So here's the two accounts that I'm trading this year. So this is an account. I started off as a $1 million account at the beginning of the year, $2 million in profits. I've wired out $800,000, and someone was asking me, well, what's your goal? Are you going to try to get this to $6 or $7 million? And no, I actually really want it as a steady source of income. So I'm actually kind of slowing it down a little bit, and I don't need to do a 100 lot trade every time, but I want it to be a steady source of weekly income. So my goal on this now is I want to make 3% a week, maybe a little bit more, and then be able to wire out 2.5%. Okay, that's kind of my goal with this account for the rest of the year. Grow it, but use it as a source of income. And what I do then is just wire out money at the end of the week. Okay, and that's real money. I think it helps psychologically to do that because it's not a video game anymore. It's real money, and you can turn it into tangible assets and experiences. And of course, in this current economic environment, it's nice to have a steady source of income that you can rely on. At the same time, with a small account, where I do trade it more conservatively, but so far this year, it's up 68%. And now I'm anticipating that this will accelerate simply because of this tool where I can actually start lining up trades that are more in alignment across multiple time frames. Yeah, wiring out is a game changer psychologically. So long story short, this is a really exciting tool. It's the Squeeze Pro, which we already know and love. It turns it into a lethal timing device across multiple time frames. And all a trader has to do is just how to learn how to use it and how to wait. So at the end of the idea is, you want to understand what's going to happen once you have the right tools. And as a trader, and this is so important in this environment, but your only goal as a trader is to create an equity P&L curve that goes from the lower left of your screen to the upper right, and that's it. And once you realize that, it takes off so much pressure, okay? It takes off the need to be right, okay? In fact, instead of trying to be right, you're going to recognize when you're wrong and get out faster. Here's the thing with retail traders. Retail traders, you read book, and I learned as a retail trader. You read the books, you study the classes, and you become an analyst. The downside of becoming an analyst is that you don't want to admit that your analysis is wrong. So that causes people to hold on to losing trades way too much. That's where the term eating like a bird and defecating like an elephant comes from. I had the fortunate experience to sit on a market maker desk for a couple of months. They do not learn like that. They have one lesson, and they have two lessons. The first lesson is take the risk. If you win, you will be happy. And if you lose, you will be wise. And then 2, if you're losing money, you're wrong. That's it. So they take small losses all day long. They're not worried about their analysis. Just if you're losing money, the market's right and you're wrong. Done. If you take that attitude and apply it to this, it makes this so much easier. It's so much easier. So it's good like that too. So the big trades once in a while are nice. You guys saw that I had that Amazon trade that was $611,000, right? It wasn't quite the $1 million trade, which, I wouldn't cry if that happened again. Still a pretty sweet trade. But at the end of the day, I want to be able to, my kids are at an age where I want to spend time with them. I don't want to be glued to the screen all the time, even though I love trading. A couple hours a day is fine. My goal is simple enough to do on my cell phone and consistency. So consistency that's simple enough to do on my cell phone. So here's a screenshot of my large account on my phone and my small account on my phone, and I can manage it from there. Now, I'm not looking at the chart there. I look at the chart on my computer, I place the trades, but then I'm able to be mobile. I can check, is it working or not? So it makes it a lot easier. So those are the tools. So new tools. I know, again, if you've already got the Squeeze Pro, you're not interested in a new tool, I totally get it. Squeeze Pro by itself is amazing. You can look at those 3 charts that I showed you. I'm happy to share that setup with you. If you are interested in new tools, we've got the multiple Squeeze Pro and the multi-histogram. I'm going to do a class around them. It'll include the tools. We'll do live trading, kind of all that stuff. So what I'm going to do is on Saturday the 16th is I'm going to do a strategy class on how to use this multiple Squeeze Pro and how to use the histogram. The Squeeze Pro is included with the class. What I typically recommend for people is that you at least do some of the live trading, and the multi-histogram indicators included with that. Now, here's the thing. 2 quick things, because I know initially some people are like, oh God, it costs money. Do I want to buy another indicator? Do I want to invest in this? The reason we do it like this with the live trading is the goal is that the trades during the class actually pay for the class. So I kind of like that idea. And in addition, we've got a PayPal option where it's no money for 6 months. Okay, so there's a couple of options there. And again, at the end of the day, I want to emphasize, if you've already got the Squeeze Pro and you're making money with it, it's fine. You don't have to, add more stuff and things like that too. I mean, I like to look at this stuff and always try to find what's the new, what's an edge? How can we extrapolate this even more? So that's what we got there. Now, a couple things I think I've told people about what's different this year versus other years. So this year, I finally found a CEO who's amazing, way, way, way better than I am, which leaves me free to trade. Okay. I've also got a trading assistant, Julia. You've probably seen her in the room, and she's been helping me do scans and keep things organized and stuff like that too. That's part of why I'm also doing so good trading this year, is because I'm not having to focus on the company. I'm able to focus on trading. I'm able to spend time finding cool stuff like this. So for me, it's been a game changer, and it's fun to share it with you guys as well. Again, with PayPal, if you guys are interested in this, you can utilize PayPal credit, and it's no money down, no interest for 6 months, and you can pay for it over time. So again, I use that. I like that option because if you've got a smaller account, I get where that could be daunting. I know if you've got a larger account, it's like, oh my God, that's not even, that's one trade. What are you talking about? So will the indicators work on my platform? They do work easiest on Thinkorswim. So they do work easiest on Thinkorswim. If you've got TradeStation, they're built out for that as well. If you do have Fidelity, Schwab, E-Trade, one thing we recommend, and this is set up for discounted commissions here, you can go to simplertrading.com/TOS. It's a free account. You can open up TOS for free, put like $50 in. You can have the indicators, and you can execute wherever you want. You can execute at Tasty, you can execute at Schwab, you can execute at Fidelity, but at least that way you've got the signals, right? And that's really what matters. You can execute on Robinhood. If you're one of the 3 million people that opened up a Robinhood account, that's great. Use these tools so that you're not one of the 3 million people on Robinhood that's getting their money taken away from them. Okay. So the basic package, again, is it's a Saturday class next Saturday the 16th, and it includes the multi-squeeze pro indicator, and that's all of the 18 time frames across the top of the screen. Right now, one thing I want you guys to notice here, I think this is going to be a game changer as well. If you guys already have the scanner, you're going to be in for a welcome surprise. But if you don't, I've requested that this class include a 30-day free trial to our Simpler Trading scanner. Why? Because we've added Squeeze Pro scans. Now, they won't be able to get 18 time frames, but you will be able to scan for the Squeeze Pro, narrow down the list of trades that you want, and then run them through the 18 time frames. And I found that this is way, way easier than Thinkorswim. And what's nice about this is it doesn't matter what broker you have, our web-based scanner will allow you to hit a button and find trades. It's so much easier than, combing through 1,000 charts. It used to take me, this was years ago, I'd spend 6 or 7 hours on a weekend doing, looking for trades. It takes like 30 minutes now. 30 minutes, set it up, done, which is pretty fantastic. The Pro package includes the 18 time frame squeeze plus the 18 time frame histogram. And I'm going to have Henry help me out with this as well. But there'll be live trading on Tuesday, May 19th, and then Thursday, May 21st. And Eric and Henry will help me out on those days as well. And by the way, and what will happen during the live trading is that even when I'm not on the mic, and even if you can't attend, there'll be push notifications available, so you get the trades. And then just because I'm not on the mic, one thing I learned from the last class is if I'm on the mic the whole day, I can miss trades. So just because I'm not on the mic, I can still be there pushing out trades, posting trades, which frankly is easier. You may have noticed is in the gold room, I spend a lot more time in the room now. I'm still only on the mic 3 hours a week, but I'm in the room posting stuff, and my God, it's way easier. When you're on the mic, it's a new piece of information that your brain has to deal with. You're talking, you're answering questions, and you're looking at the market, which frankly is not as effective as just being able to look at the markets and push out trades. So it's been nice. One of the benefits of this year of my, freeing up my schedule. And that, of course, has the multi-histogram as well. And the elite package then is basically another 2 days of trading. I like the live trading because simply you can learn about how to trade in a class on a PowerPoint. What I found is in reality, though, is that when push comes to shove, a lot of people have self-doubts and are nervous about placing the trade. The idea with the live trading is that you can look over my shoulder, obviously it's all online, and look what happens in real life in real time. Everything looks great on a PowerPoint. I'm the first one to say, like, hey, if we're going to show examples, look, here's some good examples on a PowerPoint. In real life, though, you don't know if that's going to be the perfect example. You don't know how it's going to play out. And so for me, the live trading, it's kind of like if your boss said, hey, we need you to play in a foursome in golf on Monday. And you're like, okay, yes, I'll do that. And you've never played before. So you spend the weekend reading books on how to play golf. How do you think you're going to do on Monday? Okay, you're going to suck because you have no practical experience swinging the club. And you need to swing that club in front of a golf pro that knows what to look for. Loosen your grip. You need to drive your left shoulder back. So that's the idea of the live trading. When we first, way back when we would do a class, we would just do the Saturday class and then everybody would be on their own. And what I found is with the live trading, the success rate increases exponentially. It's just, it's a big deal. Okay. So let me see what questions you guys have. So this is the link. What you do is just type in this link here, simplertrading.com/hidden. And then I will look at that page with you. And let's see what it looks like here. Simplertrading.com/hidden. And when the page comes up, you'll see this, and then you can scroll down and kind of pick your poison, right? Again, if you're not sure, if you want to do the basic, that's fine. I always recommend doing the pro, and you can also upgrade if you want. But if you like this and you're like, I don't know what to do, I would recommend the pro. I can say with confidence that this is something that will, as an investment in terms of an ROI, will pay for itself 1,000 times over the course of your trading life. And then there's descriptions. If you scroll down, if you're wondering, there's more subscriptions. But notice that there's for those of you that don't have the scanner, there's a 30-day trial of the scanner. There's no auto billing or anything like that. Okay. It's just, I want you to at least try it because I'm going to be using it during the Saturday class. I'm going to show you how I use it. It is a core part of what I do, and it's fully updated with the Squeeze Pro and a few other tricks that you will like. Okay, so that's what I got. Let me leave this page here. And the class is until the 16th, so we still got 10 days. But I wanted to make sure that you guys at least saw this. I just think, it's a game changer in terms of making life easier, especially being in the room, because I see kind of the emotional issues that people have, and I think this just removes that, frankly. So this will be on 5/16. So that's Saturday. And then the live trading, which I totally forgot when that is. Let's see. Live trading. Yeah, and if there are any earnings trades, we'll do those. We did a fun earnings trade today in PayPal. that was pretty cool. Okay, live trading. La 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 la. Yes, okay. So live trading. So this includes, of course, Saturday, and then plus live trading on the 19th and 21st. And then the elite trading, of course, is Saturday class of the 16th, the trading on the 19th and 21st, and 2 additional days of trading on the 27th and 28th. So again, just more practical new trades, follow-up of old trades, and in between, I'll be doing push notifications. And so I found that, the idea that the classes tend to pay for themselves, and with the volatility that we're having, it could be some really exciting opportunities. Okay. Oh, good question. So I actually don't know when the indicators go out. So I would have to double check on that. Yeah, so if you don't have the Squeeze Pro, because I know most of you guys already have it, but I know some of you might be newer, just contact support. They can help you with that. I would definitely get it. I mean, it's not a, if it's a new concept for you, it's kind of a game changer. But yeah, if you have any questions, I mean, again, we have plenty of time. I just wanted I wanted you guys to see the concept, start thinking about it, and then yeah, on the room, I'll show you guys tomorrow some of the things I'm looking at as well. No, so the live trading for this is separate from, good question. So it's separate from the gold room. So the idea with this is that it's a deep dive specifically into the class. And of course, the gold room would have its regularly scheduled thing. And I'd still do my stuff in the gold room as well. I typically just don't do it on the same days that I'm in the class. That way we're just 1,000% focused on the goals of the class. So in the live trading, the idea is to take the learnings of the class and then apply them in real life and look for opportunities to apply those in real life. You have the chance to ask me questions about it. I will show you my thought process as we walk through it. In the trading room, it's like, oh, cool, here's a trade, let's take it. This is like a painful explanation of why and how. How did we find it? Why are we getting in here? Why are we doing this option strategy? So that you come away with it with a lot of practical hands-on experience. Okay. So yeah, so if you guys have any questions about the okay, so what are the difference between the regular Squeeze Pro and the multi-Squeeze Pro? Okay, so the regular Squeeze Pro is what you see at the bottom of your chart, which is awesome. And then the multi-squeeze pro allows you to see it across 18 time frames at once. That's the difference there. And yeah, and so the live trading sessions will be recorded. And if you're and I know especially people that work, what they'll do is they may not be able to attend the live trading, but you can still get the push notifications, take the trades, and then review the recording later. So you kind of get that understanding of the why. Or if you have to miss, obviously, part of it. And of course, the Saturday class will be recorded as well. Oh, thanks, Angela. Yeah, no, this whole lockdown's been insane. I mean, this has been almost 2 months now. Obviously, I really appreciate the markets, and I think with the uncertainty, I'm not. I think the next year or two economically is going to be tough. I do think bigger picture that America will bounce back, stronger than ever. I had a call today with a guy from Ecuador, and oh my gosh, the situation down there is pretty dire. And so I also would like to do things like, how can we do things like with trading? I mean, just utilize it. There's going to be people out there that need help too. So it's just like, how do we? I mean, I'm getting my arms wrapped around what's going on in the world right now. It's just pretty insane. I appreciate the markets, being able to extract an income from it, and I get. I mean, frankly, sitting in front of a computer by yourself is boring after a while. I mean, I did that for 3 or 4 years after I left corporate America. So the interaction in the room, coming up with new concepts and sharing it, that's the part it's fun. I think it's just like trading by yourself. You gotta, I don't know. Everybody's different that way. I like it. Um, so it's one of those things. As long as it's fun, keep doing it, right? What's the difference, improvement, multi? Oh, good question. So multi 10x. So I'm obviously a huge fan of multi 10x, and then the multi 10x essentially allows you to see all those time frames what the 10x bar is doing, and that's something I'll definitely be talking about. So if you have that, that's an advantage. On the 27th and 28th, are we trading with you? So it'll be a variety. So an example is on the 28th. I will do live trading from 8:30 to 9:30. I'll turn it over to Eric from 9:30 to 10:30. But during the time that Eric's on, I'll be posting trades. And then Henry will do some stuff from 12:30 to 1:30. And during that time, if I see a trade, I'll post it. And then I'll be back on from 1:30 to 3. And so what we found is just that right idea, right amount of time where, it's answering questions, but also spending time finding trades and doing a combination of both. Yeah, Ivy, it's like I was talking earlier that, we had a family trip planned, to go to Ecuador and go to Galapagos Islands, go to rainforest, go to Machu Picchu. That's been canceled. I talked to the travel company today. The owner it was a YPO trip, if you guys are familiar with that organization. And he was basically like, please don't ask for a refund. But what we'll do is we're going to roll everything forward a year. I'm like, that's totally fine. I mean, the businesses down there are paralyzed, and giving refunds can be a disaster. So I'm like, keep the money. Let's roll it forward to next year when, we'll probably have more visibility. But yeah, this is the first time in probably 10 years that I don't have a flight planned. And it frankly feels kind of good. I think I was talking in the room today. I think this is going to be the first summer that we do a road trip, meaning I've always dreaded that. Get the kids in the car and drive 15 hours to Colorado. I mean, I kind of like my quiet. So, that there's potential insanity right there. But, the kids, they fart with the windows still open, are still closed. So it's like, guys, come on, you need to sign a waiver. If you're going to do that, roll down the window, give us a heads up. Don't be ashamed, but don't do the silent but deadly and kill everybody in the car. So there's things like that we're just going to have to lay the law down with if we're going to make that a reality. I like the idea of an RV. Yes, for sure. No, Cookie Monster, I actually like that. The multi 10x is legit. So one thing I'm going to talk about too is this, so sometimes what will happen in Thinkorswim is if you get too many things going on, it will slow down. So it's having those two instances of Thinkorswim open, one with the charts and I learned this from Henry, and one with just the execution. And that'll kind of get rid of that problem. But yeah, the multi 10x is super legit with this as well, because it's like if you've got, you know, yellow bars and they're about to turn green and all that kind of stuff too. So it's an added edge for sure. 3 ropes and skateboards for the kids. I love it, Todd. Yeah, so I've never, like, when my grandparents retired from farming, they had a farm in Palisade, Nebraska, which is a town of 400 people. I bought it when they retired, and my kids have never seen it. I mean, it's so hard to get to. If you're gonna fly, you got to fly to Denver, and then you drive 4 hours. So I think this summer, I'd like to go see that, and it's a good excuse to go up and see that. All right. Yeah, watch the Chevy Chase movie Vacation. Yeah, that's I like that, Gator. Do you do that, or is that? I mean, that would be pretty amazing. Yeah, the movie Vacation is pretty funny. Do you really? Okay, that's legit. I love it. Yeah, Mark. So I didn't even know you could do that. So you can have two instances of Tosh running at the same time. Someone has posted that they have 6 running, but the thing is it does overload, and so you get your charts up on one, and then if you want fast execution, you get another reiteration open. Okay, good question. So the push notification, is it a text message on your cell? So no, it is. So we have an awesome app, and you just enable notifications, and they're instantaneous notifications to your iPhone or Android. Yeah, the voodoo lines do slow down toss. There is a way to slim those down, but that's one. There's a couple things there that'll just kind of creak the processors or creak the RAM. So the multi 10x is a tool where you get the 10x bars and you can see them across multiple time frames. Well, so the multi 10x, remember, measures the ADX momentum. Multi-squeeze tells you if there's a squeeze or not, and then multi-histogram tells you what the histogram on the squeeze is doing. So yeah, that's kind of my favorite combos. It's like you get the Squeeze Pro, you have the voodoo lines, you got the 10x bars, and of course, there's a couple. I'll have a couple of different charts open like that to see all those key things, and then being able to glance across multiple time frames really makes it interesting. Can you place the multi 10x and multi squeeze on the same? You can. It gets a little clunky after a while. I like things kind of aligned and stuff like that. But yeah, the short version is you can, yes. Oh, great, good question. So Greg's just asking, John, the examples you showed were upside squeezes. Does this mean we're limited to calls? So the answer to that is no. I'm actually definitely looking. I'll show you some I'm looking at right now. So IWM. So for IWM, this is one that I'm looking at to the downside. So if you look at this, you can see here that the monthly squeeze, this is red, right? You got the monthly histogram is red. You can see we're starting to roll over on the smaller time frames, and I'm anticipating this kind of watershed. So you can see there's a daily squeeze, right? A 2-day squeeze, a 30-minute squeeze. So I'm definitely looking at that on the downside. Another one is the transports. IYT is the ETF there. I bought puts on this today. Look at this. So you got a monthly squeeze, monthly red histogram. Okay. Weekly histogram is red. Daily squeeze histogram is red. Red, 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 red. Like I can't imagine this going up. And so this is one where based on this, what I did was buy. Now, I like to go in the money, but you can buy out of the money too. So I bought the 150 puts for June, so 44 days out. That bid ask, of course, is messed up, but we're at 140, right? So I go a little deeper in the money, but you could also go, wow, that thing looks really bad. I think I'll get, maybe some out of the money options, for $2.50, because if this thing really pukes, those will double. It doesn't even have to get down to 120. So different things like that. But that's one I set up today using this. Yeah, well, remember the black arrow though is for what? It's for this time frame. So if you're familiar with these arrows, all that's saying is that, oh, this 1 minute squeeze here might pop up. So I don't really, the 1 minute arrow I'm not too concerned about because that's an 8 minute signal. Does that make sense? And then what was the other one? Now, if you look at like say Apple, I mean, Apple's a beast here. I'm not shorting Apple. Now, in the short term, you can see we've got some red here, but larger term, there's no big squeezes here. So I'm not looking for any powerful moves, but that, gives us an idea of kind of what's going on there. If we look at Facebook, same thing there. There's a big monthly squeeze. We want to see what that's going to do. But what it does is it just kind of helps us give us at a glance what's going on. Now, if you want to see something that's really bullish, when you see something like this, you'll see like, wow, look at all the larger time frames are light blue. Or Peloton. Something like, you've got squeezes week. Now, sometimes what you'll see is like, wow, why is there not a monthly squeeze? Because it's too new of a stock to have a monthly squeeze. So sometimes IPOs are like that. But you got these huge squeezes setting up. I mean, Peloton's probably gonna have a huge short squeeze tomorrow. And so anyway, team. So the nice thing is you can run stocks through this and really just kind of see what's going on. Oh my gosh, look at this. You got a weekly, 4-day, 3-day squeeze, light blue across the board. Yeah, I might be making downside bets on the indexes, but I'm buying team. So, just at a glance. So anyway, that's the kind of stuff we'll talk about during the class. All right, guys. So I'll just do a quick recap here, and then we'll let everybody get back to their evenings. And if you missed this, or you're just coming in, this has been recorded. I would highly encourage you to take a look at it. So the strategy class, which is going to be on May 16th, includes the strategy of how to use it, also includes the tool of the Multi-Squeeze Pro. We'll have an indicator setup session with Eric and a 30-day trial to our web-based scanner, which now includes the Squeeze Pro in it. The Pro class, which of course includes the Saturday class and has trading and push notifications in case you cannot attend on the 19th and 21st, also includes the multi-histogram indicator, which is awesome. And then the elite class, which includes the Saturday class, which includes live trading on the 19th and 21st, which includes, all the tools already, but also 2 additional live trading days on the 27th and 28th. And of course, this is all in May. This is the link. You can go here. There is a PayPal option where you can do 0 down for 6 months, which I think is great. And I think that's it. All right, guys. So anyway, fun stuff. I'm excited. This has been, the benefits of lockdown is you have time to dive into stuff like this. And it's just like, oh my gosh, this is pretty amazing. So I'm pretty excited about trading the rest of the year with this. But anyway, you guys have a great night. For those of you in the room, I'll see you there tomorrow afternoon. And you guys, obviously stay safe, keep your family safe, and we'll see you guys on the other side.